David, I want to start with you because you own McDonald's. The stock getting hit quite hard, feeling the heat. What's your take? Why do you like it? Would you be buying here?
Well, it's a smaller weighting for us than it's been. We bought it at the financial crisis. It was one of only two Dow stocks that was up in 2008. The stock has more than tripled since then, and the dividend has more than tripled since then. It's actually one of the highest returning stocks in American history, all in line with dividend growth. So things that are somewhat transitory quarter over quarter that can impact earnings numbers have never affected us much, and riding through that has helped us a lot. That said, the difference is the stock used to trade 15 times. Now it's trading 25 times. Even forward, it's about 20 times. So it's just expensive. But you still have a company growing its dividend about 8% per year for 40, 50 years. We like the fact that the management has done such a good job riding through what's been a difficult decade, reinventing their menu, things like that. But it isn't the higher conviction name in our dividend growth portfolio right now.
But talk about some of that reinvention, because one of the reasons why that multiple went up is because of all of those changes Easterbrook made, particularly with the automation. Anyone who's walked into a McDonald's in recent years has seen the change. I can remember going into a McDonald's 3-4 years ago, and I wouldn't want to stay in there more than 2 minutes. Now, all the ones near me, near my house, I mean, they're immaculate. I mean, they're great. They have the kiosk where you can order without having to go up. So this has brought a lot of customers to the store. That's, of course, has boosted the multiple. But then I'm not sure what the growth rate is needed to support a 25, 27 multiple.
It's more on same store. They have to continue to get that organic growth. And then, of course, they continue to have great global expansion. Now, of course, Chipotle's had a huge year. But I remember 5 years ago, the idea was young people will never go to McDonald's again. And Chipotle's the newest, coolest thing. McDonald's went up 100%. Chipotle went down 70%. Now, Chipotle's on its way back. But my point is, they cleaned up the stores. They also simply are not relying on an only millennial, hip, urban customer. They're very diversified in their customer base. But the financials tell the story. And this is something we talk about a lot, including on this show before. The dividend is not the reason to buy it. The dividend is telling us the reason to buy it. It's that it is a well-run company with very disciplined financials, a lot of balance sheet strength. We bought it originally as a real estate play that sold cheeseburgers. Okay, it's now real estate, cheeseburgers, incredible organic growth. It's a global story. So there's a lot to like about McDonald's. I haven't, of course, got to dive into this quarter's numbers yet, other than headlines. Looks like it's going to open down a bit here today, but still an amazing story last couple years.